Okay, hi everyone. This is the last analysis for this week. I've analyzed NZD USD. I've analyzed JBP USD. Now I'm going to analyze Euro USD for you, and I'm sure this is a trade that you are going to learn a lot. You are going to learn a lot. So what do we have on Euro USD? We have a very tricky trade, and I will start with weekly analysis. On the weekly chart, look at it. On the weekly chart, we can see that between um, November 2019, November and April 2020, price was ranging at this point, and then price broke up to it starts forming an uptrend. So we can say the uptrend has formed on the weekly chart. Of course, an uptrend last for some period of time before indecision happens, and then there can be a reversal of the trend. So let's check the D1 to see something unique. Okay, so on the D1, right here we have uptrend from this point here. Okay, from this point here to this point here, so we can have something like this. And recently price has been retracing. Price retraced recently. Okay, this was the resistance region where price retraces. So price reached this point and then retraces to this point. So it means that price is retracing from the from the uptrend in the daily and weekly chart. So let's use a tool that will help us to know where the trend can where the trend can retrace to, where the sell trend can retrace to, and that will take us to Fibonacci retracement. Okay, Fibonacci retracement. Let's check Fibonacci retracement. We're going to use it on the we're going to retrace this price. Okay, so we'll use Fibonacci retracement. But first, let me just put a support and a resistance. You can see that here we have a support at this point. We have a support at this point. Of course, it was resistance here before, but it was broken and it became a support. So let's price had been ranging from that level. Price has been ranging from that level until there is a break of the ranging structure. Okay, there was a break of structure and then an uptrend was formed. So let's use Fibonacci retracement to see how price move up and how it's going to retrace. Okay, so we'll pick our Fibonacci retracement here. Fibonacci retracement. You can see Fibonacci retracement. Then we'll place it from the low to where the price hits before retracing. We get our Fibonacci retracement. Let me expand it very well so that we'll see. Okay. Yeah. Yeah, let me just give it very well. We have here. Okay. And then this was the place where the uptrend ends before retracing back to the to this level. So let me just put it very well. Put it very well here, because it touches this candlestick. Okay, so you can see this. Let me just make you see this clear. Let me increase the style to 3 pixels so that you can see the color very well. Okay, so what do we do? we place the Fibonacci retracement from the low, okay, to the high, and then this is what we see. This is what we see. Okay, this is what we see. We see Fibonacci retracement levels. The most important Fibonacci retracement levels is 38.2 and 61.6, and as you can see, it is in confluence with the support zone. I'll place a support zone at the 61.8 zone, but let's just go to H4 analysis first to see what we're talking about here. So as you can see, price retraces to the 50 Fibonacci retracement level before taking off. I marked it here. Okay, price retraces to the 50 Fibonacci level before taking off, but there's something that is very crucial that is in play. First of all, on the daily chart. So first of all, on the daily chart, double top was formed. Sorry, head and shoulder pattern was formed. Let's see the head and pattern shoulder. Okay, this is the head. This is the head. Okay, and this is the shoulder. This is the shoulder. Okay, this is the second shoulder. The second shoulder. So an head and shoulder pattern was formed on the daily, and let's check the neckline. The neckline will be at this point. At this point, my advanced student will understand that this is the neckline. Okay. Now, when you look at this analysis very well, you see that this is a reversal trade, a bearish reversal trade, in which the bears will try to push back down. So we expect normally this head and shoulder pattern, when it is formed, the distance between the head and the neckline is what you're going to use to calculate the distance between the where the price will fall. So we expect the price to fall from here to here. Okay, but let's make it 61.8 Fibonacci level, because when price gets here, there's high probability that it will push up. So we're expecting price to fall to this 61.8%. This is for short traders, please. It's for short-term trades. It's not for long-term trades. I'm just trying to tell you what can happen within just a few days. But of course, the bias is still in uptrend. Just showing you what is happening. Okay. All right. Now look at this. The neckline was broken. The D1, it was broken, and then it was retested again. Let's check H4 to see more of this price action, please. On H4, you can see that the neckline was broken here. It was broken at this point. It was broken at this point. It's a very tricky trade, but I'm sure you will learn a lot in this trade because it's price structure. So it was broken here. Okay, the neckline was broken here, and then it hit the 50% Fibonacci retracement. Before heading up again. So it wants to retest this trend and this neckline to see if it's valid. So this is where the battle is between the bulls and the bear. Normally this is a bull market. However, the head and shoulder pattern was formed on this chart, so the bears want to take advantage of it to pull the price down, whereas this is a bull market. We are seeing bulls there, and you can see that this neckline is being retested, and the recent candle is bearish. Can you see? The recent candle is bearish. Also on the H4, price is at the overbought level. Can you see the overbought level here? Is at the overbought level. So if the price the price has retested is, we expect price to push further back to 61.8 Fibonacci retracement, which is also serving as a confluential support level. Okay, however, the real battle between the bulls and the bears is in the 50 Fibonacci level and the neckline of the head and shoulder pattern. So we expect price to range for quite a while. However, the upper power win if the bears should manage to break this 50% Fibonacci level. If they should manage to break this 50% Fibonacci level, then the price is heading to the normal take profit level, which is 61.8% Fibonacci level. Hope you understand that now. However, if price retests the neckline and it breaks above the neckline, then this is a head and shoulder pattern failure. Then price will further shoot up back to initial place where the head is, and that is at this 0% Fibonacci retracement. Okay, I don't want to predict anything in here. I want to react, because a good forex trader will react to market and not predict. We are reactive. We react to what market tells us, and because market is always right, it is only the market that is right. Hope you understand what I'm trying to say. Okay, so we say that if the real battle here is between the 50% Fibonacci level and the neckline of the head and shoulder, which is also the 38% Fibonacci level. You see that price has broken the 38.2 Fibonacci level, so the 50.8 Fibonacci level might act as a support to further push price up. However, if the bulls cannot hold or defend this 50% Fibonacci level, then price will head to 61% Fibonacci level, which is at this location, which is also a confluential support. You can see that is support. Okay, it was resistance before, but it was broken here to become a support. Okay, become a support. It was broken here. It was a resistance region before, but it was broken here. Okay, it was broken here. This point was broken here at during November 13, 2020. It was broken here, and then it became a support. Okay, and it has not been tested before. Okay, so the two scenarios will happen. Number one, price has tested the neckline, which is also the 30.2 Fibonacci level. If the neckline should hold, then price is heading to 61.8% Fibonacci level. However, if the retesting of the 38.2 or the neckline, the bulls were able to break it, then price is heading back to 1.23540. Okay, either way, if price should reach 61.8% Fibonacci level, we expect price to shoot up. Okay, there are also things that you need to understand here. On the D1, on the daily time frame, the price is at the oversold level. The price is at the oversold level. Can you see? At the oversold level. Okay, so price at the oversold level, meaning that a buy trade is imminent. A buy trade is imminent. However, we might not see any buy trade until 61.8% is reached. That's why I'm saying that there's a short-term sell opportunities there. However, the long-term trade is still is still buy. So let's go back to H4. Is overbought. Go back to H1. Is overbought, and you can see that price is even crossing down. Price is crossing down. Okay, so that price is crossing down from the overbought level. So this is a short-term sell trade. Looking at the M30 time frame, you can see that price too is at the overbought, heading to the heading down, and at the M15 too, you can see that at the M15 too, price is at oversold, heading to overbought zone 2. So this is a sell trade. This is a sell trade. It's a short-term sell trade. However, note something too on the H4. Something very significant happened on the H4 because a descending channel were forming, but there was a break of the structure on the H4. Let me show you this. Okay, the trend line. So that this trade is very tricky. Okay, we have something like this, a channel forming, the channel was forming. Okay. Let's check I think. Okay, let's check H1. H1 will show it very well. Okay, yeah, H1 will show it very well. It's not perfect, but at least it is a trend line. It's steeply narrow trend line. That is on H1 is a very short term trade, and you can see here that it was broken. The trend line, 1-2 trend line, not that really of a trend line, but it's a trend line, and it was broken at those points. Okay, but we cannot say it's a valid trend line. So I expect price. I just have to just put it here because if you put it here, then it's a good indication. Okay, so you can see also that price is at the trend line. Okay, at the upper channel of the descending trend line, and what do you expect? Price will shoot down. Of course, price will shoot down. So this, we have a short term sell opportunities here. Okay, so a short term sell opportunities there, because on the H12 price is at the overbought and there's a descending channel that is formed. Okay, so if price should go down, then price will definitely go down to 61.8%. So our entry point will go back to the M15 to look for the entry point. Okay, on the M15, where is the break? A break below this 1.2035 1.20325 is a value sell trade. Our stop loss, we look at the higher time frame. Our stop loss, okay, this is where you take the trade from at this point. In fact, I will expect you to enter the trade immediately because this has been touched. So our stop loss will be around the neckline trade. Let's just say here, because this is the next support level, this is the next resistance level. So I expect stop loss to be 1.21304, while our take profit will be at the 61.8% Fibonacci level, which is 1.18264. Okay, however, for a long term, for long term traders, I mean long term, not short, like long term, like traders that stay in the market for a very long time, like swing trading, just wait for price to get to 61.8 Fibonacci level before you make a long trade up, or you wait for price to, when price hold at 50% Fibonacci level and break through the neckline of the head and shoulder pattern, that you can make a long trade to 1.23570. I hope you learn a lot from this trade. This is a very good trade, and although it's tricky, I'm sure you learn a lot. You learn about Fibonacci retracement, you learn a lot about trend lines and other stuff like that. So you have a wonderful day, and I wish you a peaceful week, and take care of yourself. Bye bye.